If you have lost money in crypto in the last 2 to 3 months, then you are making mistakes. Bitcoin during the time went just sideways. But if your portfolio is down 30, 40, maybe even 50%, then probably you're doing the mistake that I'm going to describe in this video. Now, it is important to learn from those mistakes, right? It's important to trade better going forward. So let's have a look at what's actually the problem here. Have a look at this chart. This is the Bitcoin price, and Bitcoin went sideways since the 21st of November. If during that time period you have lost money, then you're not doing it right. The vast majority of people lose money in crypto. Even when Bitcoin just goes sideways, money is lost. And the reason for this is that most people look for the trending token. But once the trend is obvious, that's when the people that bought in early take profit. Let's say you bought the Trump token 1 week ago, you'd now be down 30%. Let's say you bought Virtual's protocol, right? The leading AI agent platform on the base chain, you would be down 33%. What kind of tokens performed better? It's the tokens that nobody talked about. It's Mantra, it's DEXI, it's FTX. And if you haven't been in the minority that bought things like Trump very early, that actually made then the 10 or 20x's, if you bought too late, then you're down. Now, many roads lead to Rome, right? There's many ways to make money in crypto. And one of those ways is to follow the trends very, very early, to jump on them earlier than the vast majority and make money that way. The issue is that most people don't have the time nor the nerves to do this. I do have quite a bit of time though, so I published a video on Trump when it was still at $13. And that video got 8 times more views than the average video on this channel. So $13 was over here. Subsequently, the price still went up by more than 5x. So if you are an active trader and you want to get those tokens as early as possible, then of course feel free to subscribe over here. But this video is about something different. This video is steered towards the people that still have full-time jobs, that still have families, that want to invest in Bitcoin, but that still want to outperform just buying and holding, and they don't want to see their Bitcoin holdings temporarily drop by 60, 70 or 80% during a bear market. Yes, there was a lot of chatter around altcoins in the last few months, right? We had the Trump meme coin launch, but we also had a lot of speculation on Solana with the pump.fund ecosystem. We also had the base chain expanding. Then we had Sui also taking off. But all of those micro trends cannot change the macro trend. This is the Bitcoin dominance. Since September of 2022, Bitcoin becomes a more and more important part of crypto. The altcoins in aggregate lost against Bitcoin. I'm saying this very often on this channel, and I stand by this. Most altcoins underperform Bitcoin most of the time. In other words, most of the time we are better off just buying Bitcoin. Have a look at altcoin season, or in other words, when Bitcoin dominance went down. This tended to happen when Bitcoin dominance was at around 70%, and it was just for a few days, right? This was a bit less than 2 months. Then we had another altcoin rally over here. This was 4 to 5 months. But during the vast majority of times, Bitcoin dominance tends to rather go up. And so to keep it simple, we can just stick with Bitcoin, right? We do not have to find the 1 or 2 altcoins that still outperform during times like this, right? Currently, still Bitcoin dominance tends to trend upwards. The issue then, of course, is that Bitcoin also has its volatility. The Bitcoin price went from 69K all the way down to 16K, a loss of almost 80%. We also had a massive bear market from 20K down to 3.5K. And that makes it hard to invest significant amounts of money, right? If you put half of your wealth in Bitcoin and then it suddenly goes down by 80%, it's not that easy to sleep well. Now we see here in red, this vertical line, this is when Bitcoin dominance started to go up again. So when Bitcoin did better, and we've got that same vertical line over here. In other words, when we come out of a bear market, when we've already dropped, most people tend to just buy into BTC. Most people just want to get the long-term positive exposure of Bitcoin or of crypto. The vast majority of people do not want to hunt for the latest altcoin to make a 10x. Most people are okay to just make 30, 40, maybe 50% per annum. Now, besides this vertical line, we also see a line in turquoise. This is a moving average. And I very, very much like the strategy to buy Bitcoin whenever the price is above that moving average, and to sell or potentially even short Bitcoin whenever the price is below the moving average. So this is a very straightforward trend following strategy. It's not perfect because we never buy the bottom perfectly. We wait until the price goes above, and we never sell perfectly because we first wait for the price to cross below. And we didn't sell, for example, in this case at 63K, but rather at 50K. Still, this strategy tends to work phenomenally well. I'm using this already for 4 years. Now, why the 120-day simple moving average? The reason is a backtest. So I've backtested the strategy of buying and selling Bitcoin based on different moving averages. I did this for the 2-day moving average all the way to the 200-day moving average. We can compare buying and holding during the time, which would have given us 28% per annum. And we're using a data set that starts in August of 2017, when Bitcoin was already at $4,000. So we are ignoring the super early days when Bitcoin wasn't really that well developed. When we do that optimization and we try to figure out what actually works as a trading strategy, this is the result that we get at. The x-axis shows the duration of the moving average, so from 2-day to 200-day, and the y-axis shows the result of the backtest when we annualize the returns over the time frame. So you can see when we use very, very short time periods, we tend to underperform buying and holding. Buying and holding is here in black. The reason most likely for that is that we include also trading fees, 0.2% per trade. But then once we go beyond the 30-day moving average, pretty much every moving average tends to outperform buying and holding. In other words, following the trend in crypto is a winning strategy. To have the moving average too long, then we simply just approach what buying and holding gives us, but we also don't want to have it too short. And there is an optimum, and the perfect single best data point is 120 days. And the result is absolutely phenomenal, right? This is annualized. So this compares 28% per annum versus 127% per annum. Just check out this chart. This is on a linear scale. The white line shows the Bitcoin price over the period, and the turquoise line shows what the backtest brought us if we trade according to the 120-day simple moving average. We can barely see Bitcoin's price development. We can barely see the 28% per annum that we got during that time period. Now, this is a linear scale. We can also have a look at this on a logarithmic scale. And here we can better see what happened in the early days. We do also short, so we bet on falling prices of Bitcoin when the price is below the 120-day simple moving average. But still, have a look at how consistently this is going up from one 10x to the next 10x to the next 10x. This is growing very consistently, very, very nicely. And again, this is Bitcoin's price, right? It does have way more volatility. It depresses way more during bear markets. So we don't just get more return using that strategy. We also get less risk, as in less downside risk. We tend to lose less from top to bottom. And so there are many reasons why this is a great indicator. It's great because it works very nicely consistently over time. It's also great because it works even if the parameters are tweaked slightly, right? We don't have to take the 120. It also works with the 110. It also works with the 130. And even if the future will be slightly different, it's still likely that we're going to outperform at least buying and holding, right? Most of those data points are positive. Surprise, surprise, crypto goes in trends, and we want to follow those trends. And so I really, really like this approach. And it's one of my main drivers to decide, should we, for example, short altcoins? Should we bet on leverage on Bitcoin? What should we actually do? It's one of my main indicators, and I will continue to use it in the future. And so again, it is not perfect, right? Sometimes we tend to sell pretty late. If you're following that strategy, you should be okay to feel bad when we sell, because the price dropped from the top to that selling point by 22%. And the same is true the other way around, right? You're not buying the absolute bottom. You're waiting for the price to first go up by more than 40% before buying in. But still, it is the better strategy long term. We are long during this rally and we are not losing any money during this 65% crash. And so what does this mean in the future? It means that currently we are still bullish. We're getting less and less bullish over time. The price gets closer and closer to the moving average. But currently, the 120-day simple moving average is at $89,200. If we close a day below that moving average, then I will go massively risk off and I will short altcoins left and right. I'm already shorting selected altcoins, right? I'm betting on falling altcoins relative to Bitcoin. But once we are below that moving average, then I will also short them just versus the US dollar. Now, this video is not made to show what great of a system I have developed and that this system will never fail in the future. It is to show that a systematic approach towards crypto, I believe, is superior to just the gut feel. There are many ways to optimize trading, right? There are on-chain analytics, there are realized prices, there are market value to realized value z-scores, there's hodl ratios, there's moving averages, there's many potential approaches, many ways that lead to Rome, many ways that can make money. The most important thing, though, in my opinion, is to have some kind of a system, to not just go with the wind, to have some kind of clear indication, some kind of rule set that we can then simply follow, where we completely remove emotions from the equation. Now, in the end, it doesn't really matter what kind of altcoins we chose, right? Pretty much everything went down. So it seems like it's more important to time the macro than the micro, right? The individual asset selection isn't that important. It's more important to exit when prices are high and to buy when everything is depressed. But then the question is, how much longer could we fall? What we see over here is the Bitcoin dominance. So how much of all of crypto is in Bitcoin? And that tends to oscillate somewhere between 40% and 70%. When it moves from 70% down to 40%, that means that Bitcoin becomes less important, and that means that the altcoins are massively outperforming. However, when Bitcoin's dominance is going up, that means that Bitcoin holds up relatively well. It can perform better than the alts, and it might make sense to rather be allocated towards BTC than towards the altcoins. Now, how much higher could this go? Again, this moves between 40 and 70%, and currently we are at 62%. So another 8 percentage points, potentially a bit more than that. I also like this measure over here. This shows how much are the people short-term bearish on crypto. How much are they risk off? This graph shows the stablecoin dominance. So not the Bitcoin dominance, but the stablecoin dominance. How much of all of crypto is in stablecoins? When this is very high, then the market is spooked. Then nobody is in anything risky. And when this is very low, that's the exact opposite. The market is very, very excited and wants to buy all kinds of meme coins left and right. And there is a very strong connection between the prices, right? An inverse relation. When the stablecoin dominance was at its peak, that was when Bitcoin bottomed out at 16K. When the stablecoin dominance was at its bottom, that is when Bitcoin didn't rally that much anymore. And once we saw a similar bottom in the stablecoin dominance again, Bitcoin's price also tended to not rally that much. Now, are we going to go sideways for a bit longer to then go up again, or are we going back into the 80s, 70s and 60s and revisit those stablecoin dominances of 18%? Nobody knows. But this does give us an idea that this is potentially just the beginning of the market cooling off. The market historically had been way more risk off than it is today. Yes, I know that's hard to believe when a lot of altcoins are down more than 50%, but there have been times when people went even more into the stablecoins. And that, of course, would mean more pain ahead. Now, here's what I believe is ultra important during times like this. When it's not really clear where the market is going, we need to have a plan what to do in case things turn around. The issue I see with most beginners in crypto is that there's only a plan for bull markets, right? When there's a bull market, we follow the influencers, we try to track those influencers, we try to buy small altcoins, and we hope for those altcoins to make multiple X returns. Now, when the market turns around, when it turns bearish, then the question is, what should we do? And if there is there's no plan, then people simply just keep on holding those altcoins and riding them all the way down to zero. So it's very important to have a plan what to do in case the market doesn't expand further from here. To be completely objective, right? Because if there's no strategy what to do in a bear market, then the issue is that there won't be anything, right? Then you will simply just freeze up and do nothing. There are opportunities in bear markets. I actually think that it's easier to make money in bear markets than it is to make money in bull markets. For example, have a look at this. This is Balancer relative to Ethereum. This goes down pretty much all the time. And I started shorting this over here at the beginning of 2023. Now, this is a relative valuation chart, right? This is not Balancer in US dollars. This is Balancer relative to Ethereum. And so the volatility is relatively low. BAL underperformed Ethereum by more than 84%, and Ethereum didn't do that well either. And the reason why some of those altcoins go down that consistently is because of supply expansion, right? More and more tokens hit the market. Some tokens get allocated to early investors or to the team. They then get an unlock, they get a vesting unlock, and they can then sell towards the market. And this additional supply over time depresses the price. This is why we see those bad relative valuation charts, but we can take advantage of that by betting on falling prices on relative valuations. Have a look at this, right? This is Arbitrum relative to Ethereum. Also pretty much going down all the time for the exact same reason. And so if you have never shorted an altcoin before, if you never made money with an altcoin going down, or if you never made money with relative valuation shorts, so you just bet, say, on BAL or on Bitcoin going down in US dollars, but you never really played this relative valuation game where the volatility is much smaller, then probably you're missing out on a lot of potential alpha. Most altcoins underperform Bitcoin most of the time. So we can pretty much diversify with short positions. With longs, that is not so easy, right? When we buy an altcoin, there's maybe one or two altcoins that go through the moon and others just go along and they're not outperforming that much. So we have to pick the few winners. But with picking losers, it's not that hard because, again, most altcoins underperform Bitcoin most of the time. And so I made a lot of tutorial videos on this concept. First of all, how to think about this in the portfolio, but also how to execute on those individual trades and how to find tokens that underperform Bitcoin and Ethereum the most consistently. So there's this video over here, how to win in bear markets by shorting altcoins. There's this one, gaining from relative valuation, so not in US dollar prices, but in relative underperformance to Bitcoin and ETH. There's here, shorting optimism relative to BTC. That video was published on the 5th of May 2023. So over here, since then, the price went down by 63%. And yeah, there are also more conceptual videos where I'm making nice drawings, how to profit from falling prices, how to deposit collateral, how to borrow against this, etc. Then here's another video, my steps for opening a link/BTC short. Chainlink also underperformed Bitcoin massively since then. And so if you don't want to get wrecked like the vast majority of market participants during a potential bear market, I'm not saying that the bear market has already started, but in case you don't want to get wrecked once it does start, there will be a time, then feel free to check out those videos here, right? They're all part of Premium. Premium has more than 100 tutorial videos. It's not just about shorting altcoins, it's also about managing risk and how to be properly set up across asset classes. So feel free to check it out. It's currently $165 US per month. There's also a 1-week money back guarantee. So in case you don't like Premium, in case you don't learn anything, then feel free to message me within the first 7 days and I will refund you 100%. I know this price is not very low, but it might be low comparable to the potential losses you might make if you don't have a strategy for bear markets. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in Premium. Cheers.